So there's a lot of uncertainty in the market today, and many people are struggling financially. More businesses are going bankrupt, and a lot of them are competing in a red ocean. In Canada alone, there's an average of around 250,000 people going into homelessness every year. For me, what comes to mind when I think about the current economy we're living in is 9 years ago when me and my family were going through it. And I come home to a sheriff's notice on the front door. Turns out my dad had a second loan taken out from a private lender that was trying to squeeze a ton of money out of us. There was a lot of tension, anxiety, panic attacks, and resentfulness at the time because we didn't fully know the details of what was going on with the business. My dad was a guy that first came to Canada through borrowed money and had nothing in his name. But with the vision he had, was able to build a pretty successful tool and die business from scratch. But like every business, it came with its ebbs and flows, and this was just one of those struggling moments. To give you some insight, his company provided custom parts for elevators, forklifts, and vehicles using CNC machines, eventually becoming a primary manufacturer for multiple distributors. The problem started when a lot of them were outsourcing their work to companies from China and many other locations offering cheaper labor. At the same time, the business was also on the hook for a loan taken out to invest in upgraded machines and hire more efficient workers. There were about 40 employees working at the company at the time, but competing with China's prices continues to be a difficult task.
They're all made in China.
At times we could tell things were rough, but we didn't think anything of it because he always found a way to get through things and come out stronger than before. The business had no issues repaying loans in the past, but this particular time it was too far gone and we were on the cusp of facing a potential foreclosure. It got to the point where the lender was granted a default judgment through a motion they filed in a court that we were totally unaware of. Because of this, he had to cut back, things got difficult, and we didn't fully know what was happening because my dad used to keep a lot of pressure away from us while doing what he needs to do to get things done. Not only was I unaware of the situation, but I didn't know enough about his industry at the time to be able to offer any valuable guidance or direction. I was in a totally different space, finishing up a post-grad paralegal program and working at a call center part-time on the side. Everything was happening so fast, and I knew I had to act quickly or we'd be at a major risk of losing our home. Thankfully, the post-grad program taught me a thing or two about legal proceedings, so I was able to apply that knowledge to this reality. My two main priorities were: one, figuring out how to successfully draft a motion so a judge would throw out the default judgment and the lenders would lose their authority to complete the power of sale. And two, figure out if there was a way to pay off the loan without having to sell it. So I reached out to some colleagues and friends who had access to reputable lawyers and set up consultations with 2 to 3 of them for their input. We decided to hire a lawyer with over 40 plus years of experience and was also a practicing deputy judge. With the help of his legal team, we successfully drafted a motion, filed it at the appropriate courthouse, and received a date to meet with the judge, which allowed us to focus on the second biggest priority. The lenders did not make it easy because the initial default judgment was filed in the court about 2 to 3 hours away from us. So we had to make an appearance at that court for the motion with the request for our trial to be settled at a courthouse closer to our home. Thankfully, the judge accepted our request and we could finally focus on the second priority. Since time was of the essence, we had to explore options to pay off the loan, but after looking at every alternative, selling the home ended up being the only choice, which put us in a pretty tough situation. For one, it gave the lenders leverage to take advantage of things since only they could discharge the mortgage. It was clear they were doing everything in their power to strong-arm us into paying excessive fees since they knew that we could not sell the home if they did not remove the lien from the property. So even though we were forced to sell, our hands were tied until we had a fair trial. To top things off, the court system was backdated and our trial was not scheduled until the following year. So there was a lot of pressure and it was a time-sensitive matter. We had to do everything we could to sell the home and recover the remaining costs in trial. After looking at some offers, we found a buyer for our home and our parents located a house that they were comfortable with. The realtor drafted the paperwork and we finalized the deal. But a lot of chaos happened before the deal actually closed. And here's just a few that I can name. We already had a proof of sale and our down payment was already provided to the sellers of our new home. The sale of our home could not close because, as luck had it, our buyers were faulty and they could not secure funds at the deadline to fulfill a mortgage commitment, even though we gave them ample time. Since the purchase of our new home was contingent on the sale of our existing home, we were at risk of losing the deposit if the sellers of our new home declined our sale. Now you may ask why they would decline. Well, since the buyers of our home could not fulfill the mortgage commitments, we had to request for extensions from the sellers of the new home. So at any point, if they did not want to risk losing another qualified buyer, they could have just terminated the sale. And then since we had to request for 3 extensions, we accumulated more legal fees from the new home sellers and associated moving costs, which we had to pass on to the prospective buyers of our home. On top of all this, the private lenders were attempting to strong-arm us into paying them an additional 70% above the actual loan amount in order to discharge the mortgage, in another attempt to delay the sale of our home. So to put things into perspective, we were at risk for a three-way legal battle. For one, we were already facing a lawsuit with the private lenders, but two alternative lawsuits could have sparked if the sellers of our new home decided to file a claim against us to mitigate the loss of their sale, where then we would have to claim those losses with the buyers of our home if they could not fulfill the sale of our home. Thankfully, things didn't go in that direction, and after 4 months of this horror, the buyers finally came up with financing after 3 extensions. We eventually closed the deal and passed on the extension fees and moving costs to the buyers of our home, and for the time being, this was a huge relief. And after multiple letters to the private lender and the sale of our home, the lenders agreed to remove the lien on the home with their conditions so that we can finalize the sale. After a continuous back and forth battle, they reduced their request from 70% to an additional 37% on the loan balance instead, which was still pretty unreasonable. Rather than dragging things on, we decided to provide them with the full loan value plus a reasonable amount for the legal fees. And to expedite the discharge, we agreed to send the additional 37% on the contingent of it being held in trust until our trial date so the judge could come up with a reasonable verdict. Now, before getting into the verdict of this anticipated trial, it's important to know that my goal today is to ensure that you never have to experience what my family went through. With a well-equipped business plan, you can be sure that you're putting yourself ahead. But for the purpose of today's video, I'm going to reveal 5 essential tasks that you should consider if you're ever in a situation where you have no choice but to resort to private lending. Number 1 is research who your lender is. In Canada and the US, you have access to free tools called CanLe and FindLaw, which holds a database of everyone's previous legal battles. You can easily search a personal or corporate entity and look up any past cases before you jump into any contracts with them. It turns out the lender that we were dealing with had multiple cases in the past. They tried falsifying a bankruptcy after loaning out over 14 million of funds. My guess is as good as yours, but most private lenders who have good credit are able to borrow money from the bank at lower rates so that they can lend money to you at higher rates. So if the lender's on the hook for a sky-high amount of loans that they aren't able to pay back, they are likely pursuing a bankruptcy to avoid repayment to the banks. This brings up a number of questions, but when you see something like this, consider it a red flag. Number 2 is find out if there's a loan agreement document and make sure you fully understand the terms of the contract. Just like banks, the lender should have a loan agreement in place, and it's your right to review that document with your lawyer so that you know exactly what you're getting into and if it would be a good fit. Once you have the contract details, look over the term length and try negotiating a longer term if you feel like you'll need more time to pay it off when the contract expires. If you don't explore this option up front, it could give the lender opportunity to add on excessive late fees after the term ends, making it unaffordable for you and allowing them to pursue a foreclosure. I can tell you from experience that you definitely don't want that. You want to make sure you're calculating and reviewing the interest rates so that if positive, it aligns with the past revenue, current business revenue, and future projected income. This way, you'll know if it's even feasible enough for you to commit to the terms. You can also try negotiating the renewal clause or penalty up front so you have more options when your term ends. Point number 3 is to figure out if there's an early payout provision. Let's say you found a better financing option. Well, you need to know ahead of time if you're able to opt out of your existing contract and if you would incur any penalties by doing so. This way you can make use of better options and avoid being stuck in your agreement. Number 4 is understand what classifies as a default and what happens in the event of a default. The most common default is a missed payment, but there are others like unauthorized refinancing options or late payments on taxes. Knowing what these are is just as important as knowing what the fees and penalties are. The last thing you want is to be dealing with an excessive amount of fees. This is one of the most important points you want to consider when looking into private lending. Private mortgage lenders are just like credit unions or banks. A lot of them are merely focused on retaining their money back as soon as possible, despite whatever crisis you're involved in. If the deadline has passed, they won't waste time recovering their money through your property or any other assets they have a lien on. The ball is in their court when a default happens, and you could lose your assets much quicker than you expect. This brings me to the final point and the verdict of our trial. Find out what the criminal rate of interest is. In Canada, it's 60%, which was our defense when winning the case over. Since the lenders were initially pushing for a percentage past the criminal threshold, they decided to settle. We declined any alternative offers they proposed, and if the case went to trial, the judge would have realized the excessive interest rate and fees they were seeking, and they would have been dealt with criminal charges. As a result, they did not pursue a trial, and the judge ordered them to return the entire amount in trust. And in case you're wondering why we didn't use this during our correspondence of negotiating the mortgage discharge, Well, we did. The lenders just didn't take our letter seriously and dragged on the case as long as they could. With that said, do your research on the interest rate in your area and take notes. Make sure the rate in the contract does not pass that number, and keep this in your records if you ever find yourself in a default situation. This can be useful even if the lender has met the threshold but is still pretty close to it. And so there you have it. I hope this helps you if you're ever looking into doing business with a private lender. With everything going on in our economy, we're faced with many challenges, and high interest being one of them. Save this video for reference so that you can refer back to it if you ever find yourself in a bind. If you found this video helpful, please subscribe, like, and comment below. For more insights on financial independence, click the link on the left to learn how to become your own bank. Take care, everyone, and bye-bye.